The currency market is whiplashed as DeepSeek and tariff concerns grow. Well, the dollar firmed against the yen and the euro today on new US tariff threats. That's given the markets very little time to catch their breath after Monday's big risk-off moves on concerns that America's dominance of the AI space may be under pressure. Francesco Pesole is an FX strategist at ING. Francesco, it was quite a ride for the dollar yesterday in response to the DeepSeek news, and now more noise on tariffs. How would you sum up the last few days for the dollar?
Yeah, so obviously I think this week was meant to be a week for FX to reconnect with central banks, and in practice, it's proven to be quite the opposite. So the first move was on that DeepSeek sort of AI release that is definitely threatening sort of the dominance of US tech giants on AI, and has triggered this big equity sell-off. I think the biggest and most important takeaway from an FX perspective is that the dollar does not act very efficiently in an equity sell-off in the US at the moment. And the reason for that is that markets draw the conclusions that an equity sell-off triggers an impact on US consumption that will ultimately lead the Fed to turn more dovish. And obviously, so on the back of that, we saw kind of the dollar move lower, especially against the yen and the Swiss franc. But then straight after, we had the news from sort of a media report and then comments by Trump that seemed to put universal tariffs back on the table. Those had not been entirely priced out, but surely markets were feeling a bit more optimistic on that. So we saw the tariff risk being priced in, and I think the fact that the dollar rebounded so strongly really tells us how much more central and important and sort of perceived as an imminent risk tariffs are compared to the whole sort of AI tech story.
Now, you mentioned the Japanese yen there, and I saw a note that you wrote earlier today that you think the yen could benefit in all of these moves. Why is that?
So yeah, obviously, if you look at the yen's moves in the past 24 hours, they were a bit of a roller coaster ride, and so dollar yen was back up this morning. At the same time, I think if we look a bit away from the dollar yen cross and we look at other crosses like euro yen or yen against kind of higher beta, more risk sensitive currencies, the yen can still benefit from this kind of shaky sentiment on US equities and equities in general. Is not as directly exposed to the threat of tariffs as other currencies like the China proxies, so Australian New Zealand dollar or the Canadian dollar or the euro itself. So it can probably benefit a bit more in the crosses. We may not be able to see that very clearly in dollar yen because we think that the dollar will remain strong as well. However, in other crosses, we think the yen has good opportunities of showing some outperformance.
And let's not forget, this week we have a Fed rate decision to look forward to on Wednesday. It doesn't look like policymakers will listen to the president and cut them, though, does it?
Yeah, no, definitely. Very few expectations that they will cut rates this week. I think it will be interesting to see whether there is any mention of the equity market turmoil, just to gauge whether indeed the Fed is looking at those moves and that volatility and being a little concerned about the wealth effect on US consumers. But outside of that, it should be a pretty quiet meeting, a reiteration that cuts should come at one point later this year. But for now, I think the macro backdrop still argues against any material dovish tilt by the Fed.
And on Thursday, it's the turn of the ECB. What are you expecting there?
So they basically told us what we should expect. It's the 25 basis point rate cuts. So all the focus will be on forward-looking language. Our expectations is that those will remain broadly dovish. We had plenty of communication outside of meetings by ECB members, most recently at the World Economic Forum, and I think it's abundantly clear that they are looking to cut rates more. They're definitely growth-oriented, and regardless of the U.S. protectionism risk, there is just a consideration to be made on the structural issues for Eurozone growth and they're taking those into considerations. They are aware they must do the heavy lifting to support the economy, and this is what we expect. Broadly dovish message, we don't expect much of a market impact.
That was Francesco Pesole from ING. Don't forget you can get more news, analysis and videos like this one on Reuters.com.